Hello, my name is Elliott Gue and I'm the editor of the Energy Strategist. Today I want to talk a little bit about the U.S. natural gas market, also some about the international gas market, and specifically in reference to the recent tropical activity we're seeing from Tropical Storm Gustav, which is likely to become Hurricane Gustav, and potentially going into next week Tropical Storm Hannah, which was just declared this morning. Basically what we're seeing in the natural gas market, we saw a big run-up in natural gas prices in the first half of this year. Like most commodities, natural gas topped out before the end of the second quarter, and since then we've seen a pretty violent sell-off. It's actually come down more in percentage terms than crude oil since July 1, and that's really not all that unusual. In fact, natural gas typically is more volatile than crude oil. We've also seen it, though, up year over year by quite a lot, by about 35 or 40% over the same time 1 year ago. What we see in natural gas prices generally this year in the U.S. is looking at inventory levels. U.S. natural gas in storage inventory was bloated for most of 2007. That's why we saw a pretty dramatic weakness in prices. This year we saw those inventories really normalize. What really happened was that we had a little bit cooler than average winter, or at least a winter that was in line with averages. That drove higher heating demand, and of course that brought inventories of natural gas to sort of average levels. Recently, the main fundamental factor that's been catalyzing the sell-off in natural gas is the idea that very rapid growth in production in the United States, specifically from some of the unconventional shale reserves, such as the Barnett Shale of Texas, the Haynesville Shale of Louisiana and eastern part of Texas, and some other interesting shale plays up in Canada, would actually, the growth in production from those fields would swamp demand growth in the U.S. and really bring prices way down. So far we really haven't seen that show up in the inventory statistics. If you look at the inventory statistics so far this year, changes in inventory seem to have been driven mainly by weather. For example, early this summer we saw hotter than average summertime weather across much of the U.S. Gas demand was higher than average. We saw inventories come down faster than normal, or at least not rise or not build as quickly as normal. Later on this summer, specifically in the month of August, we've seen inventories build at an above average rate. Perfect example of that is today's number. We saw 102 billion cubic foot build in natural gas inventories. Normal for this time of year would be something more like 55 or 60 billion cubic feet. Totally driven by weather again. Much cooler than average week last week for this time of the year. That drove lower than average electricity demand and of course lower than average gas demand. But longer term, if you look at if you broaden out a look at the picture a little bit more carefully, you'll see that inventories of gas and storage in the U.S. are only about 70 billion cubic feet above the 5-year average. That's nothing when you're talking about inventories which should top out at something like 3.6 trillion cubic feet, 3.5, 3.6 trillion cubic feet in November. I think we'll end the season, the injection season, or the period of the year in which we put natural gas into storage at something close to average levels this year. And I think that's more consistent with natural gas prices in the sort of $9 to $12 per million BTU range, above the current level. Really, the average of that would be above the current level for natural gas. Another factor that's been emerging, as I mentioned earlier on, is tropical activity. For some reason, despite the fact that we saw several tropical storms very early in the season this year, everybody sort of discounted the potential for there to be an impact from a tropical system in the height of hurricane season. We're now entering the height of hurricane season. We have two named storms in the Atlantic Basin. Gustav, located around Jamaica. If you look at the center of the projected path for Gustav, it shows it hitting right into the New Orleans area. Obviously that's the heart of the Gulf Coast natural gas infrastructure. I suspect we could see an outage from that as high as 50 to 75 billion cubic feet. That would instantaneously take us from slightly above average storage levels to slightly below average storage levels. We could very well end the season with gas and storage well under 3.4 trillion cubic feet, considered a very tight level. Actually, if we see an average winter even with storage at that level, you could see natural gas prices spike well up above $15 per million BTUs. And again, don't discount the fact that we're just entering the peak of hurricane season and there are already several tropical systems out there. The other factor to keep in mind about natural gas is that gas prices outside the U.S. are far, far above what they are here in the U.S. Right now in the U.K., gas prices are about double the U.S. level. That means that the idea that there will be any liquefied natural gas imports into the U.S. this year, or any increase in liquefied natural gas imports for next year, is completely fictional. You're not going to see producers send gas to the U.S. when they can get much higher prices in the U.K. An outage in a North Sea field, a Norwegian field, means that gas prices in the UK recently spiked to all-time highs for this coming winter. So I really don't see a huge amount of LNG coming to the US market either. My bottom line is that we are seeing very rapid growth in natural gas production from some of those shale plays, particularly the Haynesville Shale is one to watch. However, I don't think that's going to be enough to swamp demand, as some of the bears would contend. I think you'll need to see natural gas prices remain in a range of 9 to 11 or 12 per million BTUs on average next year as well, in order to continue to encourage development of those plays. And I think that's going to be broadly supportive for a whole variety of natural gas levered stocks. Thank you very much. I look forward to doing another one of these in the very near future.